All of us buy one or the other type of financial products. All of us buy different types of assets. Now, when we choose a particular plan or a particular asset to buy, do we know what to look for in them? If you know all the things that you need to check in them, your selection becomes easier. Instead of branding a product as bad or good or whatever it is, if we know what to exactly look for in them, then our selection becomes easier. In this episode, I am going to discuss all the points you need to check before you buy or subscribe into any particular product or decide to buy any single asset. This is NRI Money Clinic for you, and I am Dr. Chandrakantha, Bhat, investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
I do not know what is that you are looking for when you're buying a particular plan. But from my experience, from my interaction with my clients, customers, whom I interact with on a day-to-day basis, I have zeroed in on a few of the points what customers are really looking at it. I will detail them one by one here and see if these are the same things you are looking for when you are buying into that. The product, the services, or an asset, if they meet these requirements, then you can always go ahead. You don't have to worry about anything. Let us look at all these things one by one. The first and the foremost question which is there on everybody's mind is the issue of safety. Is my money safe? Is my capital protected? Can I give money to this particular scheme or to this particular institution? I'm sure the same question will be there in your mind also. Even when I'm going and depositing my money in a bank, this question is always there with me. That is why I select proper banks. If I had done my FDs in a bank like PMC Bank, we assume a bank FD to be safe, but because of the problem of institution, the money may not be safe. So when we are looking at safety, every asset class has its own levels of safety. The shares, when you buy, may or may not be safe. The mutual funds could be safe over longer periods of time. The prices of land or the real estate can move up and down. So the safety should be the primary criteria what you must be looking at it or you should be having on your mind. So when you are trying to buy something, ask this question, is it safe to invest in this? The second question people often ask is, does it give high returns? Who doesn't like returns? Everybody is asking for returns. In their pursuit for getting high returns, many a times they compromise on several other things like your safety and other things. Now, where do you get high growth? If you put your money in a bank fixed deposit, your money could be safe over there. It may not earn you a high rate of interest. If you have put money in a debt fund of a mutual fund, your money could be safe there, but it may not achieve a high rate of return. But if you have put money in proper mutual fund schemes which invest in equity market, or if you have purchased some good quality stocks, obviously they will give you high returns. Likewise, real estate could give you high returns. So if you are looking for a high growth, then you should look at proper schemes of mutual funds or proper exposure to equity or real estate without compromising safety. This should be there on your mind. One of my favorite things which I always look for, which I always advise, is the possibility of beating inflation. The product that you have chosen, the asset that you have chosen, will its growth beat the inflation? We all know the wealth can get created only if it beats inflation. Now the different asset classes that we have, if you buy gold, will it beat inflation? Obviously it will not beat inflation. It will stay with the inflation. Likewise, if you subscribe to bank fixed deposits, they will stay with the inflation. They may not beat inflation hands down. There are many times in history you could see the bank fixed deposits do not even beat inflation nor even catch it. For example, today the interest rates in United States are at zero level. The inflation is at 2%. That means by keeping money in the bank, your money is eroding its value. So I always look for instruments which can beat inflation. This should be one another thing that you should be looking at when you are choosing a particular product. One another aspect which I always look for is the flexibility in a particular plan. For example, if you subscribe to some plan, will it compel you to pay for, let's say, 10 years or 20 years without any flexibility? It will say you have to pay on a monthly basis or you have to pay on a yearly basis within the stipulated period of time, and it does not give you any holiday, it does not give you any flexibility. I feel very, very uncomfortable. A plan which gives you flexibility offers many possibilities. Your circumstances will not remain same. At times things will be very good, at times people will go through different troubles. Now we have seen in this COVID-19 situation how many people, even the rich people, many people who are very comfortable in life have also put into the problem. If you're zeroed in on a plan or a product which has flexibility features which are built into it, let's say that it will give you a payment holiday or it will allow you to restructure the payments as per your cash flows, or it will allow you to increase or decrease or stop payment altogether once for all, that would be very, very helpful for you. Flexibility features in a plan is very, very important before you choose any particular plan. The next aspect I am always concerned is the liquidity. I have put in a lot of money into this particular scheme. If I need money, can I withdraw from this? Suppose if I buy a real estate and if there is a clause which states for next 10 years or for next 20 years you cannot sell this property, it means you have no liquidity. Or if you buy a plan and it says, for example, a pension plan, you can take out money from this only at age 60 of yours, that means my money is stuck there for a long period of time. If I urgently need money, I can't take out money from that. I'm not saying that somebody should not put money into illiquid plans. Sometimes it is useful for some persons who are very, very trigger happy. If they see money, they'll spend it off. For such people, putting in a scheme which is illiquid is useful. But always I look for exit routes if there is a need for me to have cash in my hand. So liquidity features of a plan becomes extremely important. The next thing I look for in any particular plan is what are the tax benefits that come along with this particular plan. Can I reduce my income tax by contributing to this plan like an ELSS scheme, or it could be an insurance scheme, or it could be a ULIP scheme? Or what are the tax benefit I will get at the end of the term? Suppose if I am in 33% income tax bracket and the returns that come with this particular asset class or the scheme does not come under income tax, that is very helpful to me. Instead of that, if I have to pay capital gains tax at some point of time in future, that's beneficial to me. Now look at a popular example. Now if you put money in a bank FD, the interest that you get is taxable as income tax. Suppose you put this money in a debt fund of a mutual fund, this does not come under income tax, rather this will come as capital gains tax. Capital gains tax you pay at some point of time in future when you sell this particular asset. Plus this capital gains tax that you pay on the debt funds of the mutual fund will come to you with an indexation benefit. So this is a clear tax advantage. Likewise, if you put money in a mutual fund, you are supposed to pay capital gains tax. Instead of that, you put a similar amount of money in a good quality ULIP, it is 100% tax free. Now compared to a bank FD which draws income tax for the interest that you gain, a debt fund appears to be a far better bet. Compared to the debt fund of a mutual fund, a ULIP plan where 100% tax exemption is there is a far better product. But the only problem there is a ULIP plan matures at a distant future. So there is no liquidity in between. So you have to figure out what is that you are looking for and zero in on such a suitable plan for you. Another thing that you have to look for in any product is, does it give me guaranteed returns? That means whatever be the rate of return I may get, that's secondary. But the promised returns, is it guaranteed? For example, all of us know mutual funds will give you handsomely good return. But is there a guarantee in that? Obviously not. Yes, in the long term, the mutual funds will give you very good return. But in the short term, you do not know whether the funds are going to go up or whether the funds are going to come down. Or can we say you will get 15% guaranteed return? No. 15% would have been the past return, but the future 10, 15, 30 years may not give you the 15% return. Obviously, it gives you a return which is more than the bank rate of return, but you do not know a particular number what is the rate of return you are going to get. But compare this against a bank fixed deposit. At the time of entering contract with your bank, if you have booked an FD for 5 years at 6% rate of interest, at the end of 5 years, you get this 6% rate of return. Bank will not come back and tell you, no, I have changed my mind, so I will pay you now 5%. Guarantees are something which people look for and see whether the product that you are going to buy, is it offering a guaranteed returns. The other thing people are looking for are the protection benefits, which means I join a scheme, let's say for a pension purpose, I join a particular scheme. I decide to put 5 lakh rupee per year. I decide to pay for next 10 years, 7 years, 5 years, 20 years, whatever it is. But for some reason, if I don't remain in this world, what happens? The dreams of the family get shattered. But if the product says, yes, you start with that 5 lakh per year, but if something were to happen to you, I will promise you so much of a money, whether you have paid 1 installment or whether you have paid 5 installment, that gives me a lot of comfort. Likewise, child education plans many a time have got these features. You start contributing for this child education plan. For some reason, if the parent dies, the company has got clauses to say you don't have to pay further premiums at all. Instead, whatever you would have contributed to this particular scheme will be contributed by insurance company, and when your child goes to college, certain amount of money will be paid to you. So the protection benefits which get packed into the products also come handy if you are looking for such features. Dear viewers, I know you have purchased lot of products from lot of distributors or institutions all these days. Have you checked these features in the products that you have purchased? I would like to hear from you. What is that you have purchased? Does it meet your requirements? Does it meet the criteria that I discussed in this video? Please comment below. Dear viewers, I am a financial planner who operates both in India as well as in Dubai. I help people draw their financial plans and reach their life goals without any particular problem. Hundreds of people across the globe are using my services. If you are looking to get help from my services, I have shown my numbers here on the screen. You can reach out to me from any part of the world. Feel free to contact me any time of the day. Dear viewers, if the subject that I discussed today added some value in your life, please give me a thumbs up. If you are watching this program for the first time, or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your friends and relatives. Thank you very much for watching this episode on NRI Money Clinic. I will be back with you with one another topic and one another video very soon.
Press the bell icon for more details and subscribe our channel.